We often hear about and complain about the central banks, and in this case, Bank of Canada, but central banks in general always seem to raise rates too late. In other words, inflation gets away, we better raise rates, but they don't allow and account for the lag. So, in other words, inflation is well on its way. So, we saw that happen exactly when Bank of Canada had to read and react, fastest and most increases in history as we tried to tame inflation. Now, as the economy has actually started to slow down, if you're in the trenches, you can see it. They're slowly decreasing rates because they're afraid of inflation getting ahead of them. Well, at the end of the day, we know that they're going to decrease rates. They're going to do it too late, the same as they were too late in increasing rates. And we're going to see and feel some economic pain. Some are calling for a recession as if we're not already in it. Again, it depends on where you are in the cohort of income earners. And the reality of it is that in many sectors, we are in fact in recession. Now, what does all that mean? So when you look at what the Bank of Canada is or is not doing, last Friday, we had what they called a market meltdown. And of course, by Monday, that market meltdown has upticked again. Some are calling it a dead cat bounce. We're about to see the equity market was really hard. The VIX, which measures the market sentiment, spiked. It went crazy. Now the Fed in the US is calling for an interest rate decrease. Bank of Canada is expected to follow, and BMO is on that train. BMO now expects cuts at each of the next 4 meetings, which would take the rate to 3.5% by January. The cycle could wrap up by mid-2025 at 3%, which is more than half a year earlier than expected, said Doug Porter, who's an economist for the Bank of Montreal. We know that rates are going to start to come down, and that's, again, what is the timing of all of this? We look at how slow they are in decreasing rates. From my perspective, I'm just happy they're decreasing rates. My call was that they would not and they may not decrease rates this year. And that was earlier on what I was seeing in the kind of economic data that was unfolding. So I'm not surprised that they're slow to do it. I'm actually, in some regards, surprised that they are even lowering rates. So it's all to say this, is that as investors, we can look at these rates coming down. This is, again, the time to look at some of the deals that we talked about before. But the Bank of Canada is going to be seen to be cutting rates. There are lots of pressure on the Feds in the US. If the Feds lower rates, we know the Bank of Canada will ultimately follow suit, because that is who they got to stay as much as they can. They got to stay aligned with what's happening in the US. I think we can look forward to a rate decrease in September. It's just a case of, will it be a quarter point or will it be a full half basis point that they lower the rate? Time will tell. Having said all of that, we also see that bond yields have come down. So we're seeing fixed mortgage rates start to come down, improve a little bit. We're getting into the high 4s in terms of what you can get for a fixed rate right now. Not so bad, relatively speaking. So we'll see what happens with this as it plays out. They're going to decrease slower than they should, perhaps, because what we're seeing in Ontario unfolding, and we're going to talk about that in just a minute, is bad news across the board economically. So let's see what the Bank of Canada is going to do in September. Hopefully they're going to reduce rates. So if you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.